Hey everyone, welcome to your daily update for Sol and BTC. Last one for the year. Big closes, big closes today. So we've got the monthly plus all the multi-months. Basically yearly close as well. So kind of expecting a little bit of fireworks as we get closer in the minutes, counting down to the 1st of the 1st, 2026. So happy New Year, by the way, to all those out there that managed to get through 2025. So liquidity is basically just the same as it's been all week. We haven't really changed. You haven't really changed much at all. We've taken some and then we've replaced it in both directions, which just basically means we've just been going up and down, up and down, up and down in quite a tight range. Got a little bit more movement yesterday. The typical $1 daily range for Sol became something like a $3 daily range or a $4. And we have just had a very odd little work. There's been a couple of just strange little movements on the 1 minute charts, just on Sol in particular. We've just caught this sort of wick on Binance, and we've seen this stuff before. We've seen it on BitGet, we've seen it on Coinbase. Here it is on Binance. It's none of those positions obviously got liquidated because the liquidity is still there. It's like it's a move that didn't really happen. It's some kind of printing error on the chart. But that being said, most of the times when we've seen these kind of moves before, eventually the market actually moves in that direction just at a normal pace. So I've just been talking about that in the Discord this morning. It'll be interesting to see if we go up and take this 131.9 or 132 daily liquidity now or tomorrow, who knows, but at a more normal pace than a 1 minute wick. All right. Skipping ahead, just looking at things like 30-day. There's still a bit to be taken to the upside, but the levels just aren't changing. So everything's sort of around that 93 level for BTC and down to sort of around that 84, 83 level. And Sol, it's the same type of thing. The majority is gone if they went and just did a double bottom. And likewise, if they went up to the top side, 136 majority's gone. If they went to 140, well, it's pretty much all wiped out. So there's not a lot of new positions piling in, which is kind of what you'd expect at this time of year. Right, let's have a look at some of these charts. Okay, so Sol BTC on the daily. We're over top of the downtrend, so we're in a position where we can break it as long as the candle finishes yellow. The wick is just too long on the candle, so unless there's a real pump and eradicates that wick by the end of the day, then it can create a hold level by closing up over 14131. And with the wick at the top, it's just going to end up basically stuck under the trend again. It'll be able to have some kind of move. Strength will potentially go down then up as it bounces between the hold and the trend, but at this stage it's not really a bullish close. What do we got? 1 hour and 59 minutes. If this thing ends up closing down, then it doesn't break trends. It's not really a bad close if it closes down, unless it goes under the support trend that's down below. And if it closes up with no wick because of some last minute sort of pump into Sol, then you could potentially say, okay, bit of a fake finish to the year, and they've broken the trend and they've moved the trend, and we're already over top of the trend and we've got hold levels. If it actually ends up engulfing that wick, then it could actually look to try and create an entire range as well. So it's all possible from where it is. The taller that candle, the better. And the likewise, like the fake out in the other direction would just simply be a sudden dip and reversal and a move down below the trends again in the next 2 hours. So that's about all we see there. Now, if we have a look at the monthly, and this is where it gets quite bearish. So it won't be the first time we've opened a candle like this under the monthly trend, because the monthly trends don't get broken until you have a fully closed candle below them. We haven't hit the break level, So technically the monthly range is still intact. But the reason that this is quite bearish is in almost every instance that we've seen, in the last 30 days, if we open under a trend, we reject. We don't magically go back up. And when the market's quite bullish, well, then you sort of fake out under a trend and then you go back up. When the market's quite bearish, well, you go under a trend, you open a new candle, you reject off the first resistance, being the back of the trend, and then you come down here and you're going to try and break that break level. So, yeah, the monthly certainly is looking relatively bearish. Okay, so the 2-month close is under all the resistance trends. It's down below the support trends. Again, just another really kind of bearish place to be. If it was to push back up from here, yeah, it could go up to maybe 154, somewhere around there, test the underside of the trend before coming down. I guess technically it could recover it, but it's looking, looking pretty bearish. If it was to really take a nosedive and come down here to this sort of 118.06 area, that should give a bounce. So bounce off the prior broken trend, as well as a bounce off the next layer of the support trends. But yep, overall, unless it has some kind of miraculous pump before the end of the day, not a good looking close. Okay, 3-month. This move hasn't actually even played out, which is quite weird for a 3-month move. Now, if we look back here, previous types of structure that have been basically like the same as what we're looking at now, you can see we closed with the engulfment to the downside. The next candle went quite a way back up inside of it. So, you're talking what's this percentage move of 14% to the upside. All that then actually broke down and came down. And same sort of thing here, where we created a whole candle, we dropped down, we went back up to retest it, and we moved 20%. Excuse me. We went 20% back up before dumping back down. So, we're making this whole candle here. We're going to be on the wrong side of the trend. We haven't bounced from the hole and tested the trend up the top here yet. So it doesn't mean that it actually just dumps straight off this 14452 level, or that it gets up to maybe 15090 and uses the resistance of the hold to dump. It could actually go all the way back up to that trend again and touch the trend and then take the dump down. So unfortunately, with a lot of this bigger stuff, you just don't really know. If they break to the downside, they do sometimes rally and then dump. Well, when I say sometimes, the last 2 times, that's exactly what they've done. So yeah, the position that we're in now, it's bearish long term. Will they run it back up, maybe hit the trend and come back down? Very possible. Will they just tap this 14452 and then go straight down to this lower trend down here at about 119 or 11859, about there? Well, that's also an option. So they could just go tap, dump, or they could sweep all the way up, grab that liquidity and down again. So yeah, at this stage, we don't know. If we look at I think I've got the 4-month. So 4-month, getting a hold level, same thing as you can see. They can be swept and then come back down again. We're on the wrong side of all the trends. It's pretty bearish. If it goes up just a tiny bit, before the end of the day, then it might open over the top of the resistance trend, which, could be a little glimmer of hope, but it's it doesn't really mean too much. It might then just give it a bounce up to that bottom side of the resistance trend up there if it bounces between the two of them and doesn't get stopped by the hold level. But either way, we're breaking down. And if we look at the 6-month, so 6-month there's not really a lot of structure to work with on the 6-month, but from this, all you can really say is that the trend is going to move. and it's going to go to the downside here, and the candle's going to open on the wrong side of it, which at this sort of price or the strength level, anything under about 15346 by the end of the day is going to be opening on the wrong side of it. So it would take a pretty big pump to get that out of that position. In which case, yes, it could wick back up, test the prior broken trend even. And that's where it gets quite crazy. Like a chart like this, if this was to test the prior broken trend, it actually puts it back to the 12-month high at 0.0309, which is definitely a possibility. The bearish possibility, though, is that it just comes up here, touches the back of the trend and at 151, and then just dumps and continues on down to this lower trend. And I don't know what the price of Sol would be if it got all the way down to that 0.00022294, but I imagine it would be pretty low. So that's our 12-month. Right. Let's have a look at the safety assets. Okay, so on the daily, we've gone up, we've rejected from the trends, we're coming back down. We want to close under 68.53%, which will get a hold level. If we can get that hold level, then we can try and break the trend. If this was to take a big dump just before the end of the day, then obviously that would be better if we got underneath that 68.45. But at this stage, we are going to create a range trend if this candle stays blue. So that's going to be across the bottom here. And so if we get a hold level, hopefully that hold level will allow it to try and break the support trend and the range trend. If we don't get a hold level, then any kind of dip down below that trend is going to actually have extra things to support it. So it's going to have the range level, which at this stage is failing to create a distribution range, and that's keeping the price up. You've got the normal trend, which could keep the price up, and there'll also be this range trend. So if it closes yellow for the day, there's no range trend. Nothing really changes if it closes yellow, but yeah, a blue close, we want a hold level. So a close below 68.53% is the ideal minimum that we're sort of looking for there. If we look at it for the monthly, so the monthly close isn't really doing anything. It's not moving the resistance trend. At this stage, it's under that 68.92 support resistance. So yeah, all I could really expect from this is it's gonna have to either come down to hit a trigger or go up to hit a trigger. So it could go up and hit the range trend. I suppose it is enough that it's got the resistance there. So you can see this move here is basically between the top side of the resistance trend and the horizontal. So it's just kind of bounced in that little gap. When it moves over one more candle, the gap becomes bigger. So whether we hit the resistance again and then have a further fall, and that actually means strength goes into risk assets. If this thing does take a further dump, and it would be like going back to a sort of strength level from about 2.5 months ago, basically, if it was to come back down to that trend. So that's what we're seeing there. If we do a quick scan through these others. So the 2-monthers also got a resistance. What have we got sitting there? Actually, we've got a range trend. It's going to create. Actually, sorry, that's not a range trend. So it's going to create another interior trend on the 2-month. It's going to be a bit steep, and it's going to open on the top side of it. So that could create a bounce between the higher level and the new trend. You really want that to close down a bit further just so that it's under this little interior that gets created, but certainly you could get a bit of a pump and dump between risk and non-risk. Looking at that, there's no other real levels in there. It hasn't broken the hold. It's not like it's actually breaking out. Right, what do we got on the 3-month? So the 3 months run into a hold, and let's see, just adjust some of these. Yeah, so 3 month may open on the wrong side of both the support trend and the resistance trend. So that could move up, have a bit of a move up, and then have a dump down. That's it's pretty contradictory, really. For things like Sol strength to look so bad, but for the total dominance of all the safety type assets, stables, and Bitcoin to look like they could open underneath their supports, move up, trigger resist or trigger a rejection, and then take a pretty decent dump to the level that would get back to would nearly be where it was about 3 months ago. So that's interesting. Okay, what else we got? 4 month. So 4 month is going to create an interior downtrend. So if that pushes up, it'll hit resistance, and then it's got this untested range trend down here at 62. This could actually go up and dump. This is a very, very contradictory to what the other charts are kind of showing. Just double check these trends. Actually, it's not even going to be a range trend. It's actually shifting the main trend. So that means it could go up a little bit further, but then it could have a first touch rejection off that trend. So, I mean, unfortunately, that does mean it might hit 70% before it rejects off that, but it could come back to test the prior broken trend. It could actually go down first. Once it breaks that trend, this is the hard close of it. So taking the next candle down to 61.8% is just poetic, really, because it could do a test of the range trend and it could do a retest of the prior broken trend at the same time. So that's interesting. 6 month. That looks like, let's see. Yeah, so 6 month is underneath the support trend as well. It's hasn't done a first touch rejection of the topside resistance trend either. So yeah, if it heads up into that sort of 70s area, then there's a reverse hold up there as well. So anything sort of around that 72, 75, 73, just all up in there. We got trends. I mean, yeah, that could mean that there is a further dump for alts, but then the rejection off that could be pretty good. So, okay, and let's see, 12 months. Well, 12 month is going to shift trend from the looks of this. No. Well, actually, the 12 month is not even breaking trend. So, yeah, if that was to come back and retest the trend, very interesting. Right. You can see your origin level all the way down there, which at 50 something odd percent, which it hasn't tested either. And your hold level up here, which it's what's created this rejection in the first place. So yeah, that really just is a nothing for the 12 month. Right, let's have a look at these totals. Okay, so totals on the daily, this is a wee bit sneaky. So this daily hold that was created yesterday, the candle actually went up to the target and then has come back down since. So in the next hour and 40 minutes, if this just keeps on creeping up, then and closes up above that hold level, chances are it's going to push back up. It may even do this, before the end of the day. Sometimes they leave these closes looking bearish at bearish levels until the absolute last moments. And because this move actually technically went up down, it should go back up again. So just keeping a wee bit of an eye on that. Other than that, it won't be a trend break unless it flips to a yellow candle. It is showing a parabolic shift in trend though, so you move from this and then you aim up ever so slightly and then you're aiming up ever so slightly again. So this is the kind of curve that normally you see starting to appear before you get some kind of action. So we'll see how that goes over the next hour or two, but if it does keep creeping up and grinding up, we might get some better closes. So if we look at the monthly, so the monthly for the totals just actually isn't bad. So we are not inside the hold level. We're going to shift the trend from here, being top side. It's going to break. It's going to move to the bottom. We've got the untested greedy part of the hold level all the way up here at the top. We've got the prior trend that we could retest. We've got inverse resistance. We've got a range level. We're still inside the range level. There's nothing bad about the way that's closing, which is interesting because when we start to look at some of the bigger ones, the bigger we go, the closer we get to the trends, and the more likely it is that we're going to reject off them. But we may get a monthly sort of move before we see the real rejection of the higher time frames. So that's not looking overly bad. Okay, so this is kind of what I mean. If we have a look at the 2 month and just adjust our trends. This is casual day to day. I didn't go through and pre-do all these. So if we look at the 2 month, right there on the line. So a little bit more movement to the upside. Actually, what am I talking about? That trend's not even there. That's why I prepared these earlier. It moves there. Now, when that moves there, we are very clear of the line. And we haven't hit the break level. And the range level will be slightly different here. So we could have resistance at about that 2.75. The prior broken, there's a prior broken trend up there at about 3. I mean, I don't want to throw the whole hopium thing out there, but the trend that it's breaking, to retest it takes it back to all-time high because it's all the way up here, and you can retest trends that you break. So that's the extreme scope that we're kind of dealing with at the moment. You're do we go to 0 or do we go back to all-time high? Right. Let's have a look at the 3 month. Well, the 3 month's going to have a pretty big hold level on it, so that's probably going to stop us from going back to all-time high. So, or at least sustaining it. So the trend doesn't break. We're going to be back under the resistance trend, which is about 2.86. And we're going to have a hold level starting at about 2.95 through to about 3 trillion. And of course, it could go up into that hold level. That's like we've discussed, you can do that. And there'd be refinable levels inside there, which would be worth checking out. Probably things like 1 month. Yeah, so the 1 month level, which is ahead and higher of the 3 month. So don't think, yeah. No, there isn't really a 2 month. Okay, so look at the 4. See, the bigger we go, the more bearish it looks. So this could just dump, when you look at the 4 month. If we close underneath 2.69 trillion, you'd have to call that pretty bearish. If we close below 2.63, really bearish. So that's as for the candle moving back up into that, well, that's kind of where those lower time frames come in. So if you've got the 1 month as an example that ends up bouncing on its trend and trying to push up, well, this has got 4 months to play out. So the candle, of course, can come up into here, complete the 1 month move, and then actually come back down again. So it's all kind of has to work with all the other time frames to make sense. So reverse hold at about 3 trillion, so that could easily stop that. And look at our trends. Oh, we're getting some movement. Yep, Sol's getting a bit of a pump. BTC's getting a bit of a pump. Yeah, we never quite touched that topside trend. And we're going to sort of open potentially right on it. Maybe, yeah. So a little bit of a move in the upwards direction for the market cap today changes the world when it comes to this close. If it doesn't create that hold level and it just opens above that trend, then of course it can have a pretty decent bounce off that. And if it comes down any more than it already is and closes just below that wick, then it can create an entire distribution range to the downside. So that's obviously quite bearish. And the other thing it can do is come down to around the 2.45 and potentially bounce back up to the range level to test that at 3, or the other way. It can go up there and then come back down, but it's failed to create the range here. Got over it there, but wasn't able to hard close above it, so that's why it sort of rejected off that mid level. So you can imagine if the market had been more bullish and we'd actually had a 4-month range get created by getting over this 3.92, then you would have seen the top would have been up here at like 5.75, but never happened. So let's have a look at 6 month. So 6 month is gonna have a hold level. And that's up quite high, so that's up around 3 trillion. So there's a lot of confluence around 3 trillion. If we hit 3 trillion, we're hitting hold levels, we're hitting range levels, we're running into trends, we're running into all sorts of things. So if we hit that level, it's probably worth keeping a bit of an eye on it. And if you do start to get a rally, you could just use that as part of your should I be getting out of here now levels. And if we have a look at our trends, we're going to create very first total market cap 6 month. So what is that? That's like 1, 2, 3 layers. I mean, unless it goes up above 2.75 before close, then it's going to be opening on the underside of the trend. So this is a pretty typical type of move that you get, and it can take a while for these to play out because they're really high time frame. But when you hear me say things like this is an unsustainable position to be starting from, if we start from under here, we can come up into this hold, we can test, up inside here, we could go like this. People could be really, really bullish. They might think, hey, it's a super cycle, whatever. And then somewhere in that 6 month candle, it just starts coming back down like this. And then, ends up like that. So we just got to be aware that we are starting on the wrong side of things if we open this candle anywhere below 2.75. Okay. Just briefly looking at the alts, they're still struggling to get out of this on the daily, so need a pretty good pump for that to be in any means bullish, but it is going to break that trend and shift it to the bottom, so there'll be one less thing to get in its way up there, but that's about that for the daily. and the monthly close looks like it's going to be under the range trend. So just in general, the altcoins are having more restrictive, more bearish closes than what BTC is, but they still have all of those levels to the top side to be tested. So if you break all these trends today, which it most certainly will in the next hour and a half if it stays like this, then they shift to the bottom. We're not under the break level. The most bullish outcome that can happen is we test that new trend, and the biggest, greediest target that it could head for is going to be this hold level up the top here, which is going to mean running into that range trend as well. So that's like the absolute most bullish scenario. The bearish scenarios are that it just breaks these trends but gets stuck under this range trend and ends up breaking the new trend and the break level and just keeps going down. So it's these are pretty bad closes. If it can pull up, stay as a blue candle, move the trends, but at least close up over this range trend, that would be more bullish. So that sort of just doesn't have to change much. Like we're at 902. It really just has to get up to about 916 roughly to be over there. So yeah, we'll see how that goes. The bigger closes, just at a glance, 2 month doesn't. Don't know if that really looks that bad. Let's see. Yeah, so 2 months is just dangling off the trend. So it could drop. I mean, it hasn't lost its break level. It's not inside the hold. It could take a further dip, come down and hit this trend down at about 815, which is a bit of a lower low compared to where it's been in the last 2 months. But then it could bounce from that and head up to test the prior trend, which is not technically broken. It could go up and test the origin, which gets created today up there. Topside trend. There's lots of ways that can actually bounce. But yeah, a bit of a nothing close on that time frame. 3 month is threatening to make a hold level, so that's pretty bearish. Just see where the trend is. So we could be looking. You don't really want that to close under here. Look at it just teasing, eh? Because it's not breaking the trend or shifting anything to the bottom. It does have, that 735. But this is probably the important one to keep an eye on. You do not want that closing under 901.55, and we're currently at 901.87, so it's pretty close. Okay. 4 month. So there's no hold level there on the 4 month. It's good. Not really breaking out of anything. And it's closing potentially above trend. So yeah, that can bounce. It's kind of all over the place, these closes. Oh wow. And on the 6 month, we just have the king of all dojis. That's a pretty impressive doji. It might break trend if that stays yellow. Wow. Okay, so the importance of this little difference. 9 point. What are we? 9. It's going to be real close. So we need to stay. It's 901.55. So if this thing stays above that level, it doesn't create a hold on the 3 month, and it technically breaks trend on the 6 month. Now, if we break that trend, it shifts to the top side, all the way up there. and that gives this thing some pretty big scope for a bounce between those two levels. Excuse me. Yeah, so that could be interesting. There'll also be, if it closes blue, kind of the opposite. So a blue close would mean that you bring in a new interior uptrend and you don't break the downtrend, and you really do then limit the scope. It'd be a move that, you know, would not likely go past 1.05 trillion. And of course, the other end of that would be that it's going to want to come down and hit these lower levels down here in the 767 through to sort of 7 or even maybe 686, those sort of levels down here. So basically coming through the cross of the trends and then bouncing between those two versus breaking the trend and having a much bigger amount of room to play. Okay. All right, that's our totals. Let's have a look at Sol. And this is a doji. If it closes blue, it doesn't shift the support trend. If it closes yellow, it breaks the downtrend. That's basically all you can say about that. It never created that hold level yesterday, so it's just Sol's just been quite weak recently. But if this can close up, then at least it is a break of the downtrend. It might get you back up there to that sort of 128 level again and be able to push through there potentially to go up and test a higher level. But it needs to have a pretty decent little move before the end of the day, and closing up over 125. I mean, I'm sure by the time we go through everything, it's going to be 125.919, but from a daily perspective, it's 125.757. We really just want to close up over that. If we do that, we're breaking trend, we can make a move to the upside, we are creating potentially a reverse level for more support, and we're back above the support trend. Yeah, that's about it on the daily. Let's see what the monthly shows. It's a 3-week. Monthly. Okay. So the monthly, as long as we stay above 120.487 for the next hour and 22 minutes, isn't bad. So we've hit an origin level. If we close blue like this, we're hard closing this 144.7 break level. But we're also breaking these topside trends and shifting them to the bottom. So then we have a trend to try and break back into the break level, and a break level to try and break the trend. So there's no hold level in here unless you end up getting up to the reverse hold, which could be this at about 156. And the top most bullish place that this could bounce from the new trend and the origin level, because origins tend to target things like holds as well, would be to actually go back up here to that 190.753, which haunts my dreams. So structurally doesn't look that bad for the monthly. Now the big question is, how does it look on the other time frames? Okay, so 2 month, we are on the wrong side of the trend, and from the looks of it, we're on the wrong side of the break level. Yep. So if that 1 month bounces, it's fake because it's coming from the wrong side of all of this. So the bearish outcome potentially here is that we close under 125.919 and it targets the origin again at 120.487. It's also got the ability to maybe pump up to that 132, which is interesting because that's that whole little Binance wick thing. But if it came up to that 132, rejected off the 132, it could then try just to break all the support and come down. there's no trend shifting, there's nothing else moving, so it's pretty bearish, definitely bearish. Now the bullish side of it is it comes and tries to retest something from a higher level. None of these trends are actually broken, so it is entirely possible for this entire candle to reverse. And the same as we say when you start under some kind of support or resistance, you can end up going back the other way. It's like not sustainable. Well, this entire dump has come from the top side of the support trend. It wouldn't necessarily be able to get back up above the resistance trend because it never hard closed that, but it could get back up above the range trend. It could get back up above that very steep interior that's not breaking there now. And that means, getting up to that 170 area is actually a possibility, just given, that move. So, yeah, that's where that's at. I think we might have, yeah, we've got incomplete downside moves on Sol. So, I mean, it's ultimately at some point it's going to be trying to come down and break those double-digit levels, but do we get a pump out of it first? Maybe. Okay, 3 months going to have a hold level. I think we're going to get a trend break. So we're going to move our 3-month trend. And if it closes below anything below about 128, then it's going to be on the wrong side of that trend. So that's, now it could push through the hold. It could dump down to the range trend and the origin down here at 109. And then it could bounce off those and come all the way back through that trend up to the hold. And it can technically go back up inside that hold. There is actually there's no origin on this because every single one of these candles has actually touched the break level. So, it could travel up, have a bit of a bounce, have a bit of a rally. It's not over and dead until it hard closes a 3-month candle below the trend, but it's looking like it wants to be below the trend. Okay, that's 4 months. So 4 months going to have a hold level. So that's probably going to be a similar type of number. Where is that? 147. If it, yeah, there's that good old number again, 125.919. If it closes below 125.919, it may try to create a distribution range. And if it does that, yeah, that's another $69 target added to the mix of bearish targets that exist on Sol. It's on the wrong side of the trend. Trend sitting up at about that 143 mark. Yeah, hold level about 147. Range trend 166. Break level 179. Yeah. There's a reverse hold in there at 189. So, if it did start to go back up, there's a lot of stuff to get in its way. And it could quite literally open the next candle and just dump because it is below that wick currently. So that's looking pretty bearish. So about the only thing so far, I think, was the 1 month and the 2. Nah, just kind of the 1. Yeah, so Sol pretty much only has a 1 month close that has any real sustainable kind of move. And it's not really going to end up being sustainable because everything else is bad. So that's Bitcoin could save it, I suppose, by just absolutely rallying. And I think Bitcoin does look a lot better. So that's why we leave that for last. 6 month wrong side of trend unless it goes up above 130 something. So really to get on on the better side of every single one of these trends, these bigger trends, we need to be over 132 in an hour and 15 minutes, which I find kind of creepy that the Binance 1 minute chart wicked to 132.7 in a 1 minute candle as some kind of glitch. But that's, you never know. Maybe we're at 132 before we close. Maybe we're less. If we're less, it's pretty bearish stuff for Sol. Okay, let's have a look at BTC. Okay, so BTC on the daily, much like the daily totals, this candle opened and it went up and then down. So there is a possibility that this blue candle will lift back up above these trends in the next hour and end up coming back up to that 88,629. To be a better close, I mean, yes, that's good. It's above the trends. It would be a break of trend. You kind of need the wick to be gone. You really needed that price to just go up yesterday and stay up yesterday, not have a retrace like this. But you know, it can go up before the end of the day. We have enough time. If it doesn't, then it's opening under the trends. It's opening back under that lower hold level. It's inside the hold candle. Of course, that means that you can have a bearish outcome, but nothing is really hard closed. So it doesn't really give you a great idea of what comes next from a daily perspective. So yeah, all we're watching is to see if we get back. Pretty much we want a yellow candle. So we want to see it up around 88.5 or higher before the end of the day. Higher the better, no wick better. Right, let's have a look at the monthly. So with the monthly, we do sort of want it to break trend today. So while we're saying we want the daily to be like 88.5 or better, be a yellow candle at least, we want the monthly close to stay under 93.27. That then means we can break this topside trend, shift it to the bottom, and have something to bounce off. So that would head to here and open the next candle, have a bit of a dip, and then head up. So yeah, if we did that, we could bounce all the way back up to retest the prior broken trend at about 110. Also, I was showing people in the Discord yesterday, every single piece of long support that we have pretty much has targets that exist between 95 and 116, and there's a lot of them at about 108, 110. And the break level for all of that long support is 74, so it's down here. So yeah, 74,466 is the break level for this whole range. And there's a ton of different time frame ranges that all exist inside the same area. And most of them do have targets up in this higher area up here. So if we can bounce off these trends and head up there, we are just ticking a whole bunch of boxes. So it's a bit weird that we haven't ticked a lot of those boxes at this stage. It's just been really funny few months from a price action perspective. But yeah, if we close around here, we shift, we have support, we can bounce. We're not inside the hold level. There's just really no reason for it not to come back up. Plus, these sort of levels, like these 109 levels, the entire previous candle started from the wrong side of that. So you're just sort of expecting the price really to have some kind of rally. But it just hasn't happened yet. Maybe it won't because everyone is expecting it. Maybe. Right. Let's have a look at the 2 month. So 2 month is going to open above trend. It breaks that interior, but it's just touched the exterior. It'll open. This is what I mean. This is a really clean chart. Very clean chart. You've got something between 101 and 108 would be your minimum type targets for bouncing off this trend. And it can't do it on this candle because this candle is the one that creates the hold. So this has to close to make that valid. So, but once this closes and once this becomes valid, if it touches the trend again, the trend is going to want to target something up here. So that would be really normal. It would be the prior trend that was hard closed. You've got the reverse of that, which could be resistance again. That kind of lines up with that 101. And there's probably even some kind of range level in here. There you go. Range level 104. Bounced off the 83. We're still holding the trend. I don't know. Sometimes I sit here and scratch my head and just go, why are we not there yet? Right. It's probably something bigger. Okay. 3 month, that looks like it's going to break trend. Yep. So the new trend for this will be on the bottom of that candle. And as long as it doesn't go down any more from where it really is, so as long as it stays sort of around 87.3 or higher for the end of the day, then it hasn't broken the break level. It opens over the top side of the new trend. It has a hold level target 105 through to 107, and it came from up inside that part of the range. So at most sort of that 115 if it was to go all the way back up there, because it's hard closing that today. It's not hard closing 99, so like it's more likely to end up in that top area. Had to be something just to ruin our fun, didn't there? Okay, so if we look at 4 month, let's get these, move these trends. It's back there. Okay, so 4 month is bearish. So below trend, unless it closes over 90 point, about 90.3. Okay, so if the monthly candle flips yellow, you do actually technically gain back the 4 month trend, even though you don't move the monthly. But then you've got a hold level here at 93,340, 94. So around that sort of area, you'd move into resistance. So it could come up from the wrong side of the trend into there. Eventually, it's going to end up coming back down. So this is pretty much telling us that the rally will be fake. So we've sort of got a good close for the 1 month, 2 month, 3 month, but then the 4 month looks like it's going to open on the wrong side of things. And it's got that top side level there at about 109. Trend at about 113. Yeah, okay. So that could be where all the fun gets taken out of BTC. And the 6 month, let's see what we got here. Yeah, so the 6 month is going to create a trend, and unless it closes over 90.3, same sort of number, it's going to be underneath the new trend. So hold level there at 93,570, which is one of the most confluent levels on the chart for support and resistance. So that could probably be, I guess, your bearish, most bearish case would be hitting that sort of level, and game over from there. Right, well, that's BTC. Okay. Let's have a quick look at Tesla and MicroStrategy, see how they're ending the year. Well, Tesla on the daily has continued its dump, so that we didn't really know that that was going to happen yesterday, just because the candle kind of did open back up above the levels, but then it's ended up dropping down. So so it's coming back here to the hold, hasn't quite touched it. I'd say the next candle could open and have a bit of a bounce from the hold, which is that 448.95, or it could open inside the hold. If it opens inside the hold, then it's probably going to keep coming down. There are just normal reasons as to why this price should be coming down anyway, just to do things like a retest of the broken range trend. Now that puts it inside the hold, so that just kind of means how long does it stay in there. If it bounces out of there quite quickly, it's bullish. And coming back up to retest the broken range trend in the other direction makes sense as well. So if it comes out bullish quickly, if it stays in there, bearish, because it could get stuck inside the hold and break the hold and keep coming down to these lower levels. I've never really looked at the monthly on this, but that doesn't look flash just at first glance. So monthly has a hold level to try and break the trend. It's stuck under the trend resistance. Just remove all those drawings. Yeah, it's done a retest of that. So, and it's still holding trend if it opens there. So it's not game over at that price, because it's still up in this little wedge. But it's definitely headed towards the bearish side of it. So next monthly close needs to be up over top of these range trends, or that normal trend. And trying to see where the break level is. It's yeah, the monthly break level. There we go. Just adjust these trends. Yeah, so it's really got to make a choice soon. It's too late to close the month up higher because I think the market's already closed. I mean, if for some reason it just magically opens up above 460 something, then yippee-ki-yay, it's going up. But other than that, it's stuck. It's stuck in this little box. And what it's got in there is it's got a hold level which it's up inside at the moment. So really, I don't know if you're going to know too much about what Tesla's going to do for another month. And so it's failed to hard close the break level on the 2-month. So that's it's not bullish, not bearish, just not doing anything effectively. And rejection from the range trend. Most of these levels, maybe not that one. So there is sort of a level down there at 300, which is a hard closed break level that hasn't been retested. There's a level there at 315, the same. So if it starts to break down and starts to cut through some of these trends, that's probably what it's going to want to do, is come back down to that sort of 300. Arguably, that's Oh, that's probably the one at 250 is probably retested, kind of qualifies. That candle's just above it, and then this is the retest, these two candles coming down. So that's, yeah, that's interesting, but definitely 300 hasn't been retested. Neither has 313. So got some reasons to be breaking down, but it's still got support where it is. Okay. 3 month. Yeah, so and yet the 3 month is hard closing the break level. So that's going to a complicated mess. Much easier to trade this on the daily. See if we can figure out. Yeah, so trend will shift. Big wick on the top of that candle. So if it moves back up, definitely some kind of rejection off the new trend. So that would be, trend's going to shift to here. So it could head back up to 500. And then, of course, it could also come back down to the range trend. And this is the hard closed candle for the break level. So heading back to 400 be totally normal. It's also the hard close for 300. So this range back here, very tricky. Yeah, this one candle hard closes 400 and 300, so it could come back. And it looks like this would be your base. So yeah, so 398 and 307 would be the levels. Okay, so that's, see, 4 month. 4 month is not capable of breaking out because it started from the wrong side of everything. So there's nothing bullish there. That's big. 6 month. Suppose you've got to keep an eye on things like this because this is creating a 6 month hold and it's engulfed the work. So that gives you the possibility that it's going to try and hit 579 in the next 6 months. And if it closes over 579 in the next 6 months, then it's going to try to hit 804. And if it closes over 804, then it's going to, you can see where I'm going with this. So there is a path there. What it hasn't done, though, is it's come from the wrong side of the break level all the way down here. So this is how you can very easily justify these confluent targets. Right? You've come from the wrong side of two break levels, but you've created something that's going to want to create a range. So could you get a pump to the upside? Absolutely. Is it likely to actually close over this 579 and create a range and keep on going? No. It's more likely to reject and come back, possibly end up under 402 and back down to 300. So that's a mess. It's actually kind of got a hold level in the other direction too, which it hasn't completed. So that gets back down to 242. So yeah, it's interesting to look at Tesla on the higher time frames, but to me, looks like it's in a position of leaving itself open for retesting 400 and 300 as key levels, and most of the breakouts on the higher time frames have come from the wrong side of the break levels, so they need a lot of time and a lot of positive price action for that to actually confirm those breaks or create those breaks on those time frames. Okay, MicroStrategy, eh? Let's look at that. Ooh, yep. That was the moment of silence. Yeah, that doesn't look good. So if it closes here, it's got a prior broken trend that could stop it from getting out of that sort of 160 area. It's going to be back under the downtrend, which could stop it getting out of the 90s, 190s sort of area. It's going to be closing under the wick, so therefore it could try to create a distribution range, which if it successfully got under 108, and it would just be an epic drop, because if it created that as a distribution range on the 6-month time frame under 108, wow, $20, you know, that sort of price point is where that could end up heading, because you've got an untested hold down there. So that's even just rejection from one of these trends can target that. So what's that? Starts at 30, 37 and goes down to about $18. Yeah, so that looks very bearish. So from a bullish perspective, it will be doing a retest of that broken hard close range trend when it hits 130, about there. So if it taps that, that could send it. And it being such a big time frame, it could push through these trends. So if it comes back through these trends, it could go to 231, even as high as getting up into the body of that, like 300. Yeah. It hasn't created an origin on the break yet. So really, you're not going to know for 6 months whether this thing absolutely craters and stays down, but it's just, that has got to be one of the most bearish closes I think I've ever seen. Yeah. Okay. Wonder if that looks any different on 4 month. Not really. Range trend is down at $56. Prior broken trend is at about 99, 100-ish. Prior broken trend retest down at about 75. There's a lot of reasons for that to go down. Yeah. Oh, look at that. So that's the sign of just really bearish. So you had your trend running through here, tapped the trend, dumped. So it's looking for a hold level or a range trend, something like that, to support it. There's a break level that has never been retested at 89, so it just makes so much sense for it to be coming down there. And then prior trends and yeah, hold level at $20. Ooch. Let's look at 3 month. So this is the one I've normally just been watching because I just wanted to see whether it could actually escape this hold, but it looks like it's closed inside of it. We'll probably end the year inside of it. Seeing as we're in post market now. Yeah, so if it pushes up and if that hold has become resistance, then it's going to come down and try to break the break at 100, and then it's going to have a retest of, that's probably that 88 level. So yeah, 88 level hard close, not retested. Yeah. And if that doesn't support it, hold level all the way down here at the bottom of the chart. So that's all pretty confluent across these time frames. Okay, maybe a little bounce out of this. Be interesting to see whether this can actually save it. Probably not, because it's already inside the range level, but I mean, there might be a little scalp trade here just between 141 and 164. It's got a bit of confluence actually, because if it closes here, dips a little further, and then performs just the normal move between 141 and 164, the 2-month chart would really just be, see, 164 is the 3-month body of the hold. So yeah, if it went down and then bounced back up, it's just testing this level, which if it turns out to be resistance on the 3 months, we'll then just send it down further. But it doesn't mean the 2-month won't play out as an actual just independent scalp trade, which could be some pocket money if that works. Yeah, okay. That's us. Bit of a long one. Just figured I'd go through most of it and look at it rather than preparing it all earlier, because I had a bit of a late night with, with New Year's. And yeah, hopefully everyone's had a great year, and yeah, join us in the Discord and subscribe and all that kind of stuff, and we'll see what these closes bring in about 45 minutes. And yeah, catch you all again on the next one.